Today, I want to share with you what is, for me, one of the main reasons why I think the market will have a very difficult time, the stock market that is, to continue materially higher here. And it has to do with who the buyers have been to a large extent over the past decade. Before we look at that, though, I want to show you one quick chart, which is sort of a preview to something I will make a video on later on this week. And that is the relative performance that we are seeing, or really the relative underperformance of the broader market versus just a few stocks. If you remember the things we've been talking about really for months now, we talked actually for probably almost 18 months actually. We talked about one of the problems being that just a few heavyweight stocks were carrying everything, your Apples, your Microsofts, your Amazons in the world. And unfortunately, that hasn't changed. So what I did here is I took a chart of an equal weight ETF of the S&P 500, and I divided by the S&P 500 itself. And you can say you can see here, if you were to equal weight every stock in the S&P and you divide it by the actual S&P itself, the average stock is doing really badly versus just a few very heavily weighted stocks, meaning the market breadth is bad, right? Or putting another way, just a few heavy-weighted stocks like Amazon and Apple are getting all the bid. And there's a massive passive investing bubble. So we'll talk about this a little bit later on this week. But what I want to do right now is I want to go through and show you one of the major problems that we are seeing in the market in terms of where the bid has been and that it's probably disappearing or has already disappeared to a good extent. And that has to do with corporate share buybacks. I've talked about this before here publicly. We talk about it to clients really pretty much every single day through different conversations and different mediums. But the way we look at it is that you basically have three different pillars in the market. I mean, there's probably more if you go but more detailed, but we really look at it as there are fundamental things you can look at through a company or an economy. You can look at it through the lens of charts, technical analysis. And thirdly, you can look at it through the lens of structural analysis, which encompasses a few things. But one of the major things it encompasses is the bid in the market. Where's the bid coming from? Are people bullish, bearish, passive investing, all that kind of stuff. And so to me, one of the major structural things in the market that are amiss here is the fact that corporate buybacks are to a good extent going to disappear, at least for a while. We've already seen major companies announce that. Pretty much, I would be very surprised if not most companies stop doing this for a while, where they stop buying back their own stock. And what this chart shows you here, very simply, is the blue line, which is the U.S. corporate buyback. So these are stock companies buying back their own stock. And what the chart does, it tells you where the cumulative equity purchases have come from, all the way stretching back to 2008. And you can see that blue line far outweighs everyone else, which is the yellow line. So if these people that have been buying their stock, which is corporations, are going to stop buying back their stock, which a lot of them have already told us they will, and you can hear a lot more of that, where's the bid coming from, right? Now, obviously, there will be people buying at some point, but I just don't think we're there quite yet. To put this in another perspective, I have this chart here, which is very similar, telling us something very similar, but it gives us the historical perspective of just how crazy stock buybacks have been over the past few years. And you can see what it says here is that in 2018 and 19 were the first two consecutive years of where buybacks, the value of buybacks was larger than capex, meaning capital expenditures of companies. And that is something I think we're going to hear a lot of backlash from investors. We're already hearing a lot of chatter about that, but I think we're only just at the cusp, at the really beginning stages of this conversation. Remember, each crisis you end up having years for dragging it out. For years later, there'll be litigation issues of all sorts of things against individual companies, entire industries. I don't know exactly what it is this time, but I do think this corporate share buyback thing is a problem. The airlines, by the way, to some extent are already under pressure for that. They bought back something like $50 billion worth of shares over the past, whatever, maybe decade or so. I don't know exactly what the statistics are, so don't quote me on that. And now they're looking for a $50 billion bailout. right? So those kinds of things aren't going to last, and people are not going to be happy with that. But I think it's important to understand that if this bid disappears, and it is disappearing, already has disappeared to a good extent, it's going to be very difficult for stocks to continue to march higher. So with that, I hope this made sense. If you have any questions, comments, please leave them down below. Subscribe and join us in our journey here of getting the more transparent information on out to the average investor all the way to the pro. And we'll see you guys soon.